Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Setup Sunday on Monday. We're putting the setup back in Setup Sunday, the most charts per minute, per video on the internet. Week over week, not much has changed. Everybody knows that we are in a lull period, a mid-cycle lull for BTC. Black line here is the current cycle at 650 days. We typically don't start doing much of anything until 30 days from now, which is October, which is Q4. If we look at on-chain metrics, which have changed from year over year, day over day, every day the network is different. Bitcoin miners aren't even Bitcoin miners anymore. So the network is dealing with ETF inflows, outflows. It's dealing with a lot of stuff. The new equilibrium, we're going to have to figure that out. But based on where MVRV sits, we're certainly not overvalued. We're certainly not at bubble highs. This is basically just measuring unrealized gains on chain. And we're not seeing massive unrealized gains on chain. A lot of that has been realized over the past 6 months. We can look at something like coin days destroyed or value days destroyed, which is coin days destroyed times price. But again, it looks good now. It looks like it, quote unquote, called the top. There were people talking about this all the way back here months and months ago. But the problem is you've got a lot of churn that you didn't have years prior, 10 years prior. GBTC, GOX, Germany, Genesis, Grayscale. But even this has cooled off quite a bit. So we're not seeing as much of a spike in VDD, which is, again, just coin days destroyed times price. Coin days destroyed looks at the holder metric. Basically, if you've held one coin for 10 years, that's going to create a spike on coin days destroyed. You can also look at realized cap, hodl waves, which is another way of looking at who's selling. What are the age of the coins that are selling? And typically we see a big chunk of the network moving on chain at these cycle peaks, at these cycle highs. We're not quite there yet. We got close-ish in aggregate, like 50% of the chain moved coin-wise, but we want to see 80+% moving in the past 6 months on chain. So based on VDD, based on realized cap hodl waves, sure, it makes sense, right? We're seeing a lot of churn. Everybody knows we have a ton of supply unlocks. And as I said with the miners, even the miners aren't the miners anymore. They're AI plays, they're data center plays. So even something as pure as the hash ribbons may not be as valuable because you've got miners going offline to do other stuff, which is more profitable right now. But even this is signaling a potential bearish hash ribbons cross upcoming here. Looking at ETF flows, August was basically flat. Not much has happened here on the ETFs. And until we see activity somewhere, anywhere, right, it's hard to expect price to do anything. So on the BTC front, essentially flat on the month. ETH has been a just dumpster fire, let's be honest, as far as the ETFs are concerned. Nobody cares. And you'll see people saying all sorts of things. Well, the herd is coming, the institutions are coming. The truth is that over a long time frame, ETH is very correlated to BTC. So if you're looking for a crypto slice in a portfolio as an institution, you're probably unlikely to go way out on the curve on something like ETH, the risk curve, rather than just playing the BTC ETFs for now. That may change throughout the bull market, but we are not seeing any activity on the ETH front either. And if we look at seasonality, which everybody already knows, September's bad, August is bad. It doesn't mean we can't have a mega positive September. It just means historically when we flip the coin for September, it's mostly tails. Okay, that's all it means. So going forward, if I'm flipping the coin throughout this month, do I expect heads on the coin flip? I do not. I know how this typically ends up. Doesn't mean we have to go to zero. Doesn't mean we can't go into infinity. All it means is historically, we don't have a great time in Q3, and that includes August and September. Size down, leverage down, confidence in anything down, chop expectations up, touch grass up. That's it, okay? ETH, very much the same. ETH does best in Q1 and Q2, not the rest of the year. So as bearish as ETH looks, it's unfair to expect anything really until Q4 and even Q1 2025, and then ETH BTC, of course, tells the real story here. When do you want to position into ETH over BTC? Historically, it is Q1, Q2. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. Kraken also has FX pairs, it has stablecoin pairs, it's got a lot of stuff, including PAX-G, which again, people have discussed here for a couple months. PAX-G is the gold stablecoin. It hasn't done amazingly well relative to BTC, but it's gained a little bit of ground, and into the cloud here, it is looking better. But is it a slam dunk bull trade? Not quite. Maybe this is an ascending triangle, maybe this breaks out a little bit, maybe not. Additionally to Kraken Pro, we also have Kraken Desktop now, which is in open beta. If you want to take your trading one step further with more modularity, more customization, if you want to stare at ETH BTC here in a down channel, you can do that, along with a customizable watch list and many, many other features. You can sign up for that, kraken.com/desktop beta. I'll put a link for that in the description of this video as well. As far as Bitcoin, something else everybody knows that I've seen 30,000 charts of. Cup and handle, it's there. Inverted head and shoulders, whatever, right? We all know the level. This is not going to be difficult to trade. We make higher highs. As a trader, as a momentum trader, as a trend trader, I know what to do. I add to positions, I open positions, I add leverage, blah, 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 right? Until that point, there's nothing else to do. So either this goes up or goes down. Prolific, profound, I know. But until then, we are doing a bunch of nothing. The cloud still says it's fine on the weekly. We know the targets are. The target's 200, 300, whatever. It doesn't matter. What matters is you get the entry right. What matters is you know where to take action, when to take action. And this is not a cloud, a picture of a cloud that is screaming, take action. Looking at the daily in 2023, the cloud followed price pretty well. In 2024, it was excellent. And in the back half of 2024, the signals here have been garbled. So you certainly have to go up a time frame. Now, you don't know that. You don't know that the signals are going to be garbled or that you're going to get fake out breakouts. But the stop loss for any long trade is always the cloud. It's always a bearish TK cross. Even on this most recent breakout, we did not get the full complement of bullishness from the cloud. So the next trade, in my eyes, should be easier. You want to see everything bullish. Do nothing until you see the whites of their eyes, basically, because nothing can be trusted here. We've been ranging for quite some time. We can go to the 2-day, zoom out, signals get a little clearer. If we look at 2020 post-halving versus now, that's exactly what you want to see. Price above cloud, bullish DK cross. We're not there yet. And this may take some time on the 2-day, and that's fine, but I would rather be waiting for a real signal than trading signals that aren't real. So this just, again, says, now's not the time. We can go to the 3-day, same story. You're always looking for the same thing, bullish DK cross, price above cloud. We may see that in September. We may see that in October. We may see that in November. We may see that in January 2025. But until we see that, classification on this is neutral at best. Had we not already tapped the 3-day bottom of the cloud here at 48.5, this would be highly suggestive of a retracement to 48.5. Doesn't mean it's not still in the cards, but once we've completed an edge to edge like this, the next move is typically murkier. So metrics here just telling you, wait, just wait. And if you want to get trade happy, go to the 8-hour and wait for a signal there. What does the 8-hour look like now? It looks like nothing. Below the cloud, bullish DK across, bullish cloud. It's just all over the place. So really nothing to do on Bitcoin. And something else you can check that's probably better as a signal would be legacy cloud settings, Bitcoin futures, which on the daily says the same thing. Do nothing here. There's nothing to do. This leans bearish here, but so far nothing to do. Also with watching the 5200, much like last year this time, we eventually reclaimed the 50 moving average. We're not even there yet, right? So the time to get excited is back at the 50, back above the 200, bullish 5200 cross. So the expectations here shouldn't be much of anything. And if we want to get bearish, which our people have, again, I've seen 30 versions of the bullish chart, 30 versions of the bearish chart, using the 20-week moving average and the 200-week moving average. If we measure the fibs lower, that gives us a sub 40. So if it's either 40 or 300, and I'm not sure, I can wait. I can wait until we make a higher high at the very least. We haven't made a higher high in months. This would completely flush out the ETF people. Bears would be happy. There's a yearly pivot down there. We don't typically live below the 200-week moving average. Is this in the cards? Is this a realistic possibility? I mean, sure, right? It's just like, what are you going to bet on here? There's nothing really to bet on, in my opinion. Especially as this range broadens out, it makes it even more difficult to be certain of anything because the possibilities of support and resistance just widen out completely. So if you want to do ABCTA, just bare bones basics, each higher high is should we make one. You're adding to positions. This way, if it's a fake out, if it's not real, if it's bearish, if it reverses, right, whatever, you're not all in. So maybe you backweight this heavier here, lighter here, depends on what you want to do. But as an idea, this is bare bones stuff, and you can pop on the Williams fractal, Williams alligator on a high time frame, and it'll tell you basically the same thing. Anytime we're breaking above these resistance fractals, that's when you want to be adding. And the problem with adding to a short or selling on the way down is it's less obvious because of the wicks, especially because of how deep this wick was to 50. It makes the downside trading plan difficult. This does lean bearish here, for sure, on the alligator. And then as far as alts, I mean, let's be honest. Over the past year, I know everyone's going to say zoom out, go past 5 years, past 10, whatever. Over the past year, Bitcoin has beat Solana and ETH. That'll change if things get bullish. But until then, until Bitcoin's above 73, I'm not expecting Solana or ETH to do anything at all. ETH needs to get back above 3,000. Solana needs to get back above 200. And that's it. It's just black and white. We look at ETH, it looks terrible. It's far below the 50, the 200, out of the pitchfork, broke down below the consolidation zone. There's really nothing else to say. It's not bullish. It's certainly very bearish. Doesn't mean it has to keep going. It's just not something I want to sit in down here. This is the 200-week moving average and the 20-week moving average on ETH. Historically, it doesn't get much far below the 200. So maybe that's a better deal below 2250. Should we see that? But there's no pattern here. There's no div here. There's just nothing. There's no excitement at all. If we go to the daily cloud, we know what we want to see. Back above 3,000. Great. Love it. Great trade. Perfect trade. The best trade. But here, it is nothing. It doesn't even matter. It's not about catching the low or bouncing. There's just no expectation of anything here. You want what we saw in November 2023. Black and white. We're not there yet. On ETH, and then ETH BTC continues to just drip, 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 week over week. Look at the 1050 cross on the weekly. Tells you all you need to know. Look at the 50 on the weekly. Tells you all you need to know. Pitchfork. All of this remains bearish. I don't care if this is bottomed or not. It's just obviously not bullish. End of story. And if this breaks below the midline here, I could see 032 easily. There's just absolutely no evidence of strength or reversal just yet. And then if we want to get wacky and crazy, MSTR relative to ETH, what does this look like? Well, it's Bitcoin dominance, right? That's basically what this is. As we have more of these products cross-pollinating between TradFi world and crypto world, it makes a lot of sense to be honest with the numbers and say, does this look bullish for ETH relative to MSTR, which is basically leveraged BTC? No, this looks like what? An inverted head and shoulders, a cup and handle, bullish continuation, looks like Bitcoin dominance. All the more reason to steer clear of ETH until this chart flips. Sol, ABCTA, again, it's in a range. We're bearish below, we're bullish above. That's it. If this breaks down, sub 80 is possible. If this breaks up, 400 is possible. Now, Sol actually looks a lot like MSTR on the cloud. And here's an interesting thought experiment. What gets to 400 faster? Sol or MSTR? MSTR Sol chart is kind of a mixed bag, but does look like it favors MSTR. Cloud here in MSTR is not bullish, just to be clear. Below the cloud, bearish, to get across bearish cloud. That is not a plan of action of bullishness. But just like Sol, I like MSTR 183, 200. This is basic horizontal resistance. And we can compare the two over the past year. If you want BTC beta, I mean, the answer has been clear. It is MSTR. MSTR is 3x Sol over the past year. So not a lot of strength for alts in general. Now, before we go full TradFi here on setups, because I'm seeing this on NVIDIA, we're also seeing this on a few AI-related alts. There's a few other non-AI alts that are showing the potential for some sort of inverted head and shoulders. So that's something to watch this week. Do we start to see this stuff curl up a little bit into the cloud, maybe even break out? Because when I'm looking at NVIDIA on the low time frames, on the daily, whatever, despite earnings, despite guidance, despite things broadening out, this still looks like it may break out. Now, on the crypto side, this is actually probably detrimental to us because we need to be in the broadening out conversation. We need NVIDIA to not suck all the oxygen out of the room. So as a trade, this is possible. As a crypto holder, I don't want to see this playing out. I do not want to see NVIDIA breaking past 135 towards 190. But this is a trade to consider this week. Should we see NVIDIA back above 126 and ultimately back above 130, 132, it does have this inverted head and shoulders look to it. So it does look very good. Tesla's another one. Maybe a little too soon on this pattern to actually play out. I wouldn't expect this quickly, but there is also a case to be made for an inverted head and shoulders on Tesla on low time frames. That basically measures back to 270. And then if we zoom out a little bit on Tesla, we've also got this possibility, which would be another inverted head and shoulders horizontal resistance, again at 270. The Tesla bulls are going to focus on the target, which is 500, but let's see us break this first. Let's see us get to 270 first. But it's something to watch throughout September. I think of the Mag 7, Tesla has mixed seasonality through September. But again, we may see broadening out into stuff like this that hasn't done so hot year to date. Speaking of cars, Uber, another chart that looks very good at resistance. And there's a lot of these charts floating on legacy that are not alt-like. They're not breaking lows. They are ready to break highs. Momentum ready to resume higher. Very bullish on the daily cloud. Doesn't mean it has to break out this week. Doesn't mean it can't dip back down to 67 and get an inverted head and shoulders of its own. But it looks very good here relative to many, many charts out there. Then we've got other stuff. This is ETF land. IGV, tech software ETF, those are the holdings of this ETF, but this looks also ripe and ready to go. Maybe not this week, maybe not next week, but probably by the end of the year, we may start to see this break out, especially if NVIDIA does not break out. There will be money looking for charts elsewhere that look better. And this is SMH, which is the opposite of NVIDIA in that it looks like a head and shoulders fractal to me in the making. Unlike IGV, where it's ready to break out of its cup and handle, SMH has already reached its cup and handle target, and you'll probably get a 3-day bearish TK cross on this, solidifying a momentum shift, at least in the near term, to something else, broadening out. IGV versus SMH, something else to watch. Do we see this parabolic downside break and this move higher? I would definitely encourage some creative thinking when it comes to charts, when you're comparing all this stuff across sectors. This is Hack, very similar to IGV as far as the cup and handle setup there. Also looks ready to go. Also has lots of names that people love, like PANW. But another option that is not an altcoin, that is something to trade, Hack versus IGV, also looks like maybe we see a move here. Favorable to Hack in the near term. I don't know, right? But it's something to watch that will probably move sooner rather than later. PayPal continues to look very good on the 3-day. This is exactly what you want to see after a multi-year downtrend, a multi-year grind. Finally, we're making higher highs instead of lower lows. That's it. That's all it is. So the cloud gives it its blessing on a 3-day. Roblox, another silly chart that Roblox, am I saying it wrong? It always looks very, very good, or at least it looks very good here. Patterns like this always attract me like a moth to a flame, because again, multiple years of chop, consolidation, returning back to the highs, anything above ultimately 50, it's probably good to go. but you're probably not seeing this on your favorite altcoin. TNA is another one, leveraged IWM, looks very good. Chopped around for years, has done nothing, has gone nowhere. I wouldn't sit in leveraged ETFs for an extended period of time because of the fees, but as a trade, decent looking chart. LABU, another leveraged ETF, same deal. If we get broadening out, if we get small caps doing well, if we don't get some crazy negative jobs data that gives us a slam dunk recession, money is looking for a home somewhere else that is not NVDA, that is not Mag 7. And as rates come down, money will slowly be moving out of the risk curve or into the risk curve. That's going to take some time, but I really like how this chart looks as well. You also got UFO, which is a great ticker. It's the space ETF, another crowd favorite with Rocket Lab in there, RKLB. This chart also looks excellent on the cloud. Multi-year downtrend, recently made a higher high, broke out, and is as risky as risk gets, right? This is way out there on the risk curve. UFO relative to WGMI even looks very favorable to UFO here, at least in the interim. So as crypto's chopping around, there are options. There are things to look at. There are things to do. This is a leveraged EV ETF. Not that I'm pushing leveraged ETFs at people, but I was just looking around because you've got this Harris versus Trump trade idea, the Harris hedge here. You've got Lucid. I know that chart looks very good individually. A lot of these companies may go bankrupt. I have no idea. But as a trade idea, it's something to watch into the end of the year because these have really been down only for many, many years. Then the boring stuff, TLT, looks very good. Long bond ETF, Cloud loves it. IEF, 7 to 10 year, Cloud loves that as well. SHI, 1 to 3 year bond ETF, looks very good. And AG, looks very good. On trend. So there are things to trade out there, at least based on my system, the setups that I like. It's just, unfortunately for now, it's not Bitcoin. It's not alts. And we just need some time for the setup to be more clear. Once crypto starts to break out, if it does, it's the only thing that matters. It will outperform everything. It always has. It always will. It's the riskiest of the risky. But until Bitcoin can make a higher high, there are other things to do. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.